If you hold or trade crypto in the UK, HMRC are coming for you. From the 1st of January 2026, HMRC will have access to all of your crypto transactions in real time. They'll no longer be relying on you to report your gains, they'll have the data already. My name's Rayhan Mobile, I'm a chartered accountant and founder of Sidekick Accounting. In this video, we'll break down exactly what HMRC can currently see, what's changing, what you need to report, and how you'll be taxed on your crypto transactions. If you're holding, earning, or trading crypto in the UK, this video is a must-watch. I'm going to start by clearing up a myth that crypto is anonymous. It is not fully private, it's pseudo-anonymous. Yes, your wallet address doesn't show your name, but the blockchain is a public ledger. Every single transaction is permanently recorded. Once a wallet is linked to a person, typically through an exchange's KYC process, it's no longer anonymous. Investigators can see everything that wallet's ever done, and they can tie it back to a person. Now, HMRC already has power to get your data from Binance or Kraken. However, they had to submit a case in order to do this. What's changing is they now have automatic access to everyone's transactions without needing suspicion or a reason to create a case. Instead, the exchanges will automatically feed data on every transaction for UK taxpayers to HMRC. This is because from the 1st of Jan 2026, the UK will join the Crypto Asset Reporting Framework, a global initiative to tackle crypto tax evasion. So what does this mean? Well, as part of that automatic data transfer between exchanges and HMRC, they'll be able to see all of your crypto to fiat trades, your crypto to crypto swaps, and transfers between wallets, even your own. This is a huge change because they're going to have real-time visibility into your crypto activity. As a result, you can expect more tax inquiries and more nudge letters from HMRC when what you report doesn't line up to what they know. Now let's look at how crypto is taxed in the first place. Crypto is treated like shares or property. That means capital gains tax is due when you dispose of it. Question when it comes to crypto is what's classed as a disposal. It's essentially any time crypto changes hands, whether that's selling your crypto for fiat, swapping one coin for another, paying for something using crypto, or gifting crypto, unless it's to your spouse, which falls within some capital gains exemptions. Key thing to know here is even if you never convert your crypto to cash, it's still classed as taxable when you make a swap, for example, Ethereum to Solana, or when you dispose of it for a stablecoin like USDT. These are taxable events and gains on these transactions need to be reported. Next up, what is capital gains tax payable on? Capital gains tax is paid on the gain you made. So that would be your sales proceeds, less your acquisition cost, and less any fees that you incurred to buy or sell that crypto. Once you have your gain amount, you apply your capital gains tax rate, which is currently between 18 and 24%. And the final thing to note on how your crypto is taxed is that for the 25 to 26 tax year, you have a £3,000 capital gains tax-free allowance. That means your first £3,000 of gains is not taxable. Now, what I've just spoken about is by far the most common way that crypto is taxed. However, there is a small nuance you should be aware of. In some instances, your crypto transactions could be classed as income and taxed at income tax rates, which are much higher than capital gains. This typically happens when the crypto is not classed as an asset you're holding and instead it's something that you're trading and using day to day. This could apply where your crypto activity covers airdrop, staking rewards, and mining income. In a situation where your crypto is classed as income, it will be taxed in the same way as your salary or dividends. If your crypto income exceeds £1,000 in a year, it must be declared on a self-assessment. This is called your trading allowance and it's separate from the £3,000 capital gains allowance we spoke about earlier. So now that we know how crypto is taxed and at what rates, the next question is how do we report it? Well, there's no automatic reporting for crypto in the UK. You're responsible for calculating your gains and putting them onto your self-assessment to essentially tell HMRC this is how much I owe. Now, the mechanics of filing a self-assessment are pretty straightforward and not what I'm going to cover in this video, but essentially what would get reported is your net total gain from crypto, which will then be applied at the appropriate tax rate and you'll be told how much tax you need to pay. But what's really complicated when it comes to filling in a crypto self-assessment is all of the back-end and transactional data that you need to prepare to get to that final number. HMRC expects full details of the dates of the transactions, what you bought and what you sold, any fees you incurred as a result of those transactions, and the original cost and sale value. As we get to this point where more and more people are realizing they need to report their crypto transactions, here's a pro tip. Keep your own records of your transactions and don't rely on the exchange to hold your historic data. We have many clients who come to us wanting to report to HMRC, but they don't have the data from years ago because the exchange no longer holds it. Let's be on to the next piece, which is what if you don't report? Up to now, loads of people have been flying under the radar hoping HMRC don't catch up. With this change where HMRC are going to have access to all of your data, the risk of an investigation dramatically increases. They'll have the data to firstly know that you have crypto, but secondly, they'll have the data to check that what you report matches up to what actually happened. Penalties for non-reporting will fall in line with the current guidelines for self-assessment, escalating from fines and penalties up to more serious criminal prosecution, especially where they deem this omission to be deliberate. If you've not declared your gains so far and are getting worried, the best step for you to take is to make a voluntary disclosure to HMRC. This is where you come forward to report your gains before HMRC come knocking. This won't erase the tax owed, you'll still have to pay it. However, what it will do is stop it from escalating and also minimize any penalties and fines that you might incur. And with that, I want you to take away 3 key things that people are always getting tripped up on. Firstly, do not think that if you do not cash out, you do not owe tax. That's false. Secondly, don't think that swapping crypto is not taxable, because it is. And third, if you're transferring between your own wallets, that's a safe transaction and does not trigger a taxable event. If ownership changes, it's taxable. If you found this video useful, please give it a thumbs up and subscribe to my channel. And if you have any questions on crypto tax, drop them in the comments below and I'll reply personally.